Okay, well, welcome back to Introduction to Financial Services Industry. This is part two of equity products. I think where we ended last week or last video was part one, was talking about why the companies issue stock, and we talked about common stock. So let's continue. Let's pick up from there. Again, the same disclaimer as always. This is really geared towards a novice introduction to financial services, and we're not going to make any financial advice. So we talked about the common stock as a product, as an equity product. The next product we're going to talk about is preferred stock, preferred shares. So what is preferred shares, right? I had the certificate, which is a American Cities company, who I don't know who they were, but it's nice because in this particular specimen, it shows you that this is shares of preferred stock. It's 100 shares each of preferred stock in this company. So what is preferred stock and how is it different from common stock? So preferred stock is a class of ownership in a corporation that has a higher claim to the assets and earnings than common stock. Okay, what does that mean? That means that, first of all, if you go bankrupt and you have to liquidate everything in the company, the preferred stockholders get paid first. So their claims for the assets of the company get paid first. If you go out of business and we have to sell off all the equipment and assets and we're settling the liabilities, preferred stockholders are going to get paid before the common stockholders. But I believe the bondholders get paid ahead of them. The second thing is preferred stockholders are going to have a higher claim to dividends, right? And dividends are those quarterly dividends, profits, earnings of the company that are paid out to shareholders. So preferred stockholders are going to have a higher claim to dividends, earnings, and the assets of the company. But generally, preferred shareholders are not going to have any voting rights. So they don't get to elect the board members, right? And there's a good reason for this, because if preferred shareholders were electing the board members, well, the board of directors determines dividends, right? So, it would not be good business for preferred shareholders to have voting rights generally. In some cases, preferred shares will have a predefined, specified dividend, and other times it's just they're going to get the dividends first. Preferred stock generally has a dividend associated with it that must be paid out before dividends are paid to common stockholders. And the shares usually do not have voting rights, right? Okay. By the way, that's why if you buy a share of common stock and you buy a share of preferred stock will often call for a higher price. So that's why when you say, I want to buy 100 shares of Apple on the market, okay, are you buying, and that you buy 100 shares, are you buying 100 shares of Apple Class A common stock, or are you buying 100 shares of Apple preferred stock? Because they're different things. They're completely different products, and they're going to get different prices. The precise details of the structured preferred stock is specific to each corporation, right? However, the best way to think about preferred stock is as a financial instrument that has characteristics of both a debt obligation, right, and an equity. So as an equity, it appreciates value as the company does better over time, and it operates like a debt product, a fixed income product, because it gets dividends, it gets paid fixed dividends. So if you're a retired person and you want to have income, a preferred stock is a reasonable tool you may want to consider, because it pays dividends, which you can then take as income. So, but as a result, preferred stock might cost more than the common stock. So that basically is the difference between preferred and common stock. All right, the next product we're going to talk about in the equity family is restricted stock shares. Now, These are very different than common shares. These are very different. These are restricted. And when I say restricted, they're not available on the market. You can't just go onto NASDAQ or New York Stock Exchange or wherever. You can't go to the exchange and you can't buy restricted shares. These shares are closely restricted and they're held at the company. So these are unregistered shares of ownership in the corporation that are issued to corporate affiliates, such as executives and directors. So typically restricted shares are issued by the corporations to attract senior executives. So the senior leadership of the corporation will get these shares. Restricted stock is non-transferable. You can't sell it to somebody else, right? It must be traded in compliance with a special set of SEC regulations. Also, referred to as a letter of stock or a Section 124 stock. It typically becomes available on the sale under a graded vesting schedule that lasts several years. So basically, if you're a senior executive at a corporation, you will get these restricted shares. The board of directors will give the senior executive management of the company a certain number of restricted shares as a way to motivate the executives. Well, first of all, it's as a way to attract top executives to come to the company and fill executive positions, and also as a way to motivate the executives to make the company perform well, so the overall stock price goes up. So therefore, the value of their restricted shares goes up. And again, they vest over several years. Now, this goes to show how long I've been doing this here. I clipped this piece of artwork off Google or someplace years ago in 2009. And in 2009, it was looking at Silicon Valley, and it was looking at Yahoo, Cisco, EA, HP, and others. It was at MeTV or whoever, and it showed it showed grants of restricted shares. The CEO of Carol Bartz of Yahoo, how much does she get in her compensation in restricted shares? It hasn't been an enormous amount of money. So this is a way that restricted shares are a way that equity ownership is granted by the board of directors to the executive management to recruit executive management and to retain them, because it vests over several years, and motivate them to make the company perform well for the shareholders. Now, I put this up here and I've updated it periodically. This is a SEC Form 4. So we know SEC is a Securities Exchange Commission. We're going to talk about that in another video. But there was an SEC filing by Apple, right? Everybody knows Apple. And Apple gave the new retail chief, Angela Ahrens, 113,334 restricted shares of APL stock, Apple stock, worth about $68 million based on May 5th, 2014. Because at that point, Apple stock, the AAPL, which I think is I don't know if that's the Class A or the Class C common stock, but that Apple stock, because Apple changed symbols and changed names they changed symbol, I think, at one point. On May 5th, that stock, that 113,000 shares at $600 a share, was worth $68 million. This is as of May 5th, 2014. So you see, this is a form that the company had to submit to the Securities and Exchange Commission for their approval for this senior executive to be granted these shares of restricted stock. So these shares are not traded on the open market. These shares are unregistered shares that the corporation has that they're giving as restricted shares to the senior executive, and the SEC has to prove this, right? The SEC, remember, they're there to make sure as a regulator that the game is not fixed. They're making sure that everything is fair and above board, and that the end investors are not getting shafted. But here's what's really amazing. Apple did a 7-for-1 split in 2014, right? So they granted these shares in May, but in June, they did a 7-for-1 split. So for every one share that Angela had, she was granted 7 shares of the new stock, of the stock. Now, of course, at that time, the price was adjusted, right? You got 7 times more shares, but each share was worth 1/7 of the current price. That's $600 a share. So she went from having 113,000 shares to 7 times that. Then the stock split again, 4-for-1 in August of 2020. So as of today, well, as of October 20th, 2021, this would mean that her 113,000 shares had grown to 3,173,352 shares. And the current price I saw of Apple as of October 20th was $148 a share, $148.62. So as of October 20th, the total value of this grant to Angela Ahrens would be worth, if fully vested, $471 million, $471,623,574. That's almost $500 million. All right, so you can see how this would be a way to greatly motivate Angela as a executive at Apple to perform highly. Now, the next product we're going to talk about are units. They're also called restricted stock units, which are different than restricted shares, but units, RSUs. A restricted unit is a grant valued in terms of the stock, but the company's stock is not issued at the time of the grant. After the receipt of the unit satisfies the vesting requirement, the company distributes shares or the cash equivalent number of shares in the value of the unit. So what this means is sometimes what companies will do is they will grant people a certain number of units to motivate them, motivate employees. So if you were an employee of Merrill Lynch back in the day, at the end of the year, as part of your bonus compensation, you'd be granted so many units. And those units would vest over 4 years. And at the end of 4 years, you would be paid by the company the cash equivalent of what those units would have represented as stocks. So let me try to explain this. If you got 10 units and it vested over 4 years, at the end of that 4 years, they would say, okay, well, a share of our stock is worth $100 a share. You've got 10 units, which equals 10 shares. So we're going to give you $1,000 cash, right? So the units are the cash equivalent of the stock. And the company's not necessarily giving you the stock. In some cases, it would be better if they give you the stock, sometimes. In some cases, it's better if they give you the cash. But generally, the units are the cash equivalent. It could be the stock equipment, which ends up looking a little bit like employee stock options. But generally, the units are the cash equivalent. Compensation offered by an employer to an employee. Basically, that's what we're talking about here. Units are compensation offered to the employer You don't get anything immediately. It vests over several years, usually like 4 years. And at the end of it, you're going to be paid cash that equals the value of the stock. Now, why do you do this? It motivates employees. So, this is a way that employees are motivated to make the company do better, to make the stock go up, right? Because if the stock goes up, their units are going to be worth more cash. If the stock goes down, their units are worth less cash. So it motivates. It's a way companies can use an equity product to motivate employees to help the stock perform. Vesting schedules gives an incentive to employees to stay with the company and redeem their shares. Because, and by the way, I should say, even though it's usually, in my experience, units are usually referred to a cash equivalent of the stock, it could actually equal the stock itself. I haven't seen that, but my understanding is that's a possibility. But the other thing is, because you don't get anything until it's fully vested. So let's say it vests over 4 years. This is a motivation for the employee to stay with the company and not leave. Restricted stock units are assigned a fair market value when they vest. Upon vesting, they are considered as income, and a portion of the shares are withheld to pay taxes. The employee receives the remaining shares and can sell them at any time. So in this example, they are saying that you would get the actual shares. I'm just saying I've seen this done where it was you got the cash equivalent to the shares, but it's the same way either way. Either way, you are going to have a tax liability as income. So that's units. All right, well, that's the end of this section, and I hope you guys come back for section 3 on equity products. And again, I'm Paul Judge. That's my email address. Please contact me if you have any questions. And I hope to see you on the next video. Thank you. Have a nice day.